Hi, it's Larry Gaines, Power Cycle Trading. Well, the energy markets have been hot here for the last few days, and the hottest part, really, of the energy market has been gasoline, or what they call RBOB, which is the unleaded gasoline futures. But I want to show you a trade setup that we did. This was based on a swing trade setup and based on our Power Cycle Trading model. But first off, here's the continuation contract for RBOB, or unleaded gasoline. So I like to follow the futures as the underline and look for trade setups, and then I can either use the futures contract or I can use a ETF for less leverage. So this is RBOB, and you can see that it was consolidating sideways here, starting back in mid January, and then just really went sideways. And a couple things about RBOB is that you have a seasonality trend to it, but the other thing that we like to look at is then for a cycle shift, using our momentum indicator cycle 1 and 2 and our 3 cycle indicators here. So the shift came right here when cycle 2 started going above 0, and that was on the 27th. And then you can see over here on a 4-hour time frame, it was in a volatility squeeze, so we got in right in here and had a nice pop to the upside. Now, yesterday we had that big spike to the upside, so I took profit on my UGA, and this is one way you can do it. So, you're going to have a lot more leverage if you use the gasoline futures contract, and if you don't want that leverage, then the other thing you can do is use UGA. So let me shift to that, and I'll show you how that works. So UGA is the ETF for unleaded gasoline, and it's pretty much the same. So you can see here, cycle model, cycle 1, 2 up, long entry there on the 27th. Here's the 4-hour time frame, very tight volatility, what we call a volatility compression squeeze, and then it breaks out and spikes to a high. So took off, into that spike, took off the contracts of UGA right here for a really nice profit. So it went from 30.65 up to 36. So, $600 or $6 a share. So if you had 100 shares, it's $600. So that's one way to do it. Now, the other way that we do this type of spread or this type of trade is using a spread, and I'll show you that real quick. It's a very cool way to do it so you're hedged. So this was the other way to do this trade where you're hedged. So if you're worried that crude was going to come off, this time of year gasoline tends to go up to the upside or seasonally, pushes up on demand more so than crude. So in this particular trade, on the same exact date, the 27th, bought RBOB, but instead of just being long naked RBOB, sold crude against it as well. So let me show you where that spread was. So the RBOB on the 27th was trading right here at 161.43. Crude on the 27th was trading at 47.60. So long RBOB, short crude as a spread, and then RBOB blew out a lot stronger than crude, and you can see it's coming off harder. So still long the spread. Now that's using a futures contract out in May, so May RBOB versus May crude. The other way to do it, and the other way that we did it, was using UGA versus US. So if you didn't want that extreme leverage from a futures contract, the other trade was just to buy the UGA ETF and sell the USO ETF, one-for-one type share set up on that, and take advantage of that spread widening on the gasoline versus crude. So it was a great trade setup. It's still a good trade setup. We're still in that, but did take profit on the long UGA outright yesterday. So nice profits overall. Hope this helps. Hope you like this trade setup, this swing trade setup, and I'll talk to you on the next update.